What's going on, everyone, and welcome to the TC Trading channel. So in today's video, we're diving into Heikin-Ashi candles. That's this right here. Now, we're talking Heikin-Ashi candles, a better candlestick taken from Investopedia right here. We want to dive into why these are useful, how they're calculated, and then, of course, actually some examples of using them in our own trading and looking at a stock like NIO here to dive deeper. Now, I noticed a lot of people when they see Heikin-Ashi videos, I've actually just noticed a few online before making this video. It's actually funny how I'm just watching them and it's like a computer generated voice and like someone talking over. Like, to be honest, you have no idea realistically who was behind that video for the most part of some of those more viral, I guess, videos where it's that computer voice. You don't know if the person who's making it actually has any experience with this stuff. I personally have used these candles and I think they have their use for sure in active trading. And so we're going to be diving into that. Both swing trading and day trading, they can be useful for sure. So what is this? Well, Heikin-Ashi comes from average bar in Japanese. So here's the formula. Now, if you want to take a screenshot, please go ahead and do so. But when it comes down to it, let's understand the basics of Heikin-Ashi. So already on the channel, we have a video going over candlestick charts, and then we have a video going over hollow candles, and then if there's not one already, there should be one coming very, very soon going over the bar chart. So we're going all over all of these different types of charts, and we're not just talking about line charts, because that's fairly straightforward. It's pretty easy to digest. Now, the average bar, let's just think about this logically, right? We're taking more of an average. So when you look at a candlestick, you're going to get the high, the low, the open, the close, and you're pretty much going to get the exact same thing out of a hollow candle, although the colors and hollow versus solid will help tell you and differentiate what that means. Again, if you don't know what that means, check out the other videos on the channel. But this is going to be more of an average. So what could that be helpful for? That could be very helpful for looking at trends, identifying trends. That is where I see the most value in Heikin-Ashi. Obviously, everyone's going to have their own style and technique if they like to use this stuff, but I personally know a lot of very, very experienced and professional traders who strictly use Heikin-Ashi candles. That's it. They do not use anything else. This is their charts. If they see a bar, a line, a hollow candle, or a regular candlestick, they're like, what is that? It doesn't help me. So this is what a lot of traders are really conditioned to use. And here's an example here on Investopedia before we dive into our own charts of what a normal candlestick chart would look like, and then what it would look like if you turn that to a Heikin-Ashi chart. And so you can see it's not exactly the same, but what do we notice? Now, inside of a downtrend, inside of an uptrend, we notice that individual days, you can have up days and down days inside of a larger trend. And that's what we kind of noticed during some of these downtrends, this uptrend, this downtrend. But with Heikin-Ashi candles, you can see that we have a lot of these solid or hollow candles going up and then solid candles going down, indicating the downward momentum, these black candles versus these clear or these hollow white background, whatever candles, empty ones. So you can kind of see that there's less noise inside of an overarching move. So it's a lot easier here to, if you're someone who likes to trade the trend or you want to just follow the trend, this is the chart that you probably want to take a peek at or dive deeper in. Because if we go back here, this gives you so many opportunities inside of this downtrend and uptrends. It gives you so many opportunities to second guess yourself, going, oh, now the trend's reversing. Oh, what's going to happen tomorrow? And next thing you know, you stop yourself out of a trade. For example, right here, if you're trading the stock to the downside, this candle right here freaks you out. Oh my gosh, the trend's no longer a downtrend, only for us to go down all the way down here, like $10+ almost $20 further to the downside just 2 days later. So that's where playing with the trend and letting Heikin-Ashi candles do their job and kind of get that better average of that candlestick or of that time frame, that's where it's important. Okay, so let's dive in now to Webull, right? Here is Webull, okay? This is a Heikin-Ashi chart looking at NIO. I have my own lines drawn in, of course, but here is our chart. Now, on top of just looking at this for trends, right? So we can obviously see a clear downtrend right here. And then as of late, we can see a pretty clear uptrend right here with our Heikin-Ashi candles. What's really interesting, and as these candles get larger and larger and larger, that just shows you how strong the trend is. And it doesn't have to be perfect, and it's not going to be perfect every single time. Now, you're going to have examples where you would think the trend gets super strong, and then all of a sudden it kind of pulls back. Obviously, after a pretty substantial day to the upside, wouldn't surprise us to see the stock pull back. And that's exactly what we saw with NIO. But we can take advantage of a good chunk of that move. Now, how do we identify a trend change and how do we find that move before it starts to really happen? That's where we like to use what we call doji reversal candles. Okay, so what's a doji candle? I'm going to zoom in on one right here. It's this guy right here. I know it's a bit small. Let me see if I can get a little bit bigger. It's this guy right here, actually on the 30th of March for NEO. A doji is where you have a very small body, like it's a sliver across on the body of the candle, which we can see right here at this 3630 area. And then we have a pretty big wick up and a similar size wick down. So you have a substantial wick to the upside and to the downside, and your body is very small. What does that tell us? That tells us indecision. So we can utilize these Heikin-Ashi doji candles to give us a really good sense of this may be the spot where the stock wants to reverse. And we can actually see it a couple times. After this short uptrend from NEO dipping down to the low 30s, it pushes up here, hits up over 45. We get this red doji right here, which then that comes in at 44. If you're taking a position at that doji, well then guess what happens? NEO ends up selling off in the next couple of days, and you end up with about $10 per share on the next 2 weeks if you're swing trading NEO to the downside for puts or just shorting the stock as it is. Then you have a doji candle right here. We have a doji. 2 days later, the stock reverses up and you make a solid, $5 to $7 gain per share on NEO just like that. So you can start to see how those dojis are really helpful into determining a trend shift. Now you guys can use these on any time frame. Obviously right here, we're looking at the 1 year, 1 day chart. So things are a little bit different, but if you're using this on a 1 day, 1 minute chart for, faster price action, for very short-term price action for day trades, the same type of concept will apply. Lining up areas where you may be looking at resistance with a doji candle, that could really signal a spot where the stock may start to pull back to the downside. And lining up a doji candle with an area of support that you've drawn on the chart, area that the stock doesn't want to drop below, that can be really nice as an area to buy in as it reverses back to the upside. So that's really the use of looking at Heikin-Ashi candles. Obviously, there is more there in terms of the calculation. It's a little bit more, complicated. But essentially, think about this. The closing price that you're going to see for a candlestick. Now, when we go back to our candlestick videos, a green candle means that the stock was up from open to close and a red candle down from open to close. So the average price of the current bar, the current time frame, the current candle, that's what it's going to give you for the close. And the midpoint of the previous bar, that's what the open is going to be. And so that's how you calculate the open and the close, and the wicks are still going to be valid. So you can kind of see the wick of a candle, that's going to tell you that the stock had range up towards that level or down towards that level intraday, but the open and close are calculated as by this equation right here. So there you guys have it. I appreciate you guys for tuning in. Leave any comments down below in the comments section. Check out those other videos going over other types of candlestick charts that we can use and how you can utilize them and decipher them in your own trading. I appreciate all of you guys for tuning in. Hit that thumbs up button. Also, there'll be some links down below to any other resources as well as Webull, which is this platform right here that you can trade stocks on utilizing these candlestick patterns if you would like to. Up on the top left, you go here to line style under your charting feature, and then Heikin-Ashi is currently the last selection on that chart. And you can go back and forth changing your style of candlesticks as you see fit. So thank you guys so much for tuning in. Hit that thumbs up button. Links for any free stocks will be down below. Appreciate you guys so much, and we'll see you in the next one. Peace.